crypto is quite insane. Like it's about 12 years old as an industry, and it created more millionaires than any other industry in history. Hello, YouTube. It's Crypto Rookies here, and I'm accompanied by Jane, who reached out to me a few weeks ago. She was asking if I could teach her how I do my crypto investments, or like I build wealth and preserve my wealth in crypto. So welcome, Jane.
Thank you, Patrick, for giving that opportunity and allow not only me, but other people to know and get some knowledge about the blockchain, trading, and many interesting stuff that I think would help a lot for many people.
So before we start with actual questions, I think I can just say a few things about why preserving wealth is important and why, for me, I picked crypto as a major portion of that. So if you look at inflation in the US last year, it was 8%. This is the inflation that was disclosed. But every year, they change how they compute inflation. So if you no longer buy Lamborghinis, they don't account anymore in the calculation of inflation. So the things that often you can no longer afford and you no longer buy them, they are excluded from the calculation in favor to things that you can afford. So to me, it's not exactly a really good metric of the real inflation that we suffer. I would argue that it's a lot higher than 8% last year. If you have a lot of money in the bank, you're losing quite a lot in terms of purchasing power. So that's why it's really important when you decide to make investment to preserve your wealth, that you generate at least more than inflation, and ideally maybe twice as much if you really want to preserve, or if you want to build wealth, you need to generate even more than that. So that's quite difficult. If you look over the past decade, there's two industries that generated the most returns. One is if you invested globally on the stock market in tech stocks, we have achieved, I think, about 16% over per year over the last 10 years. So that's quite good return. There's risk to that. Meanwhile, if you had invested in crypto, the return per year would have been on average 74% over the last 10 years. That's a lot higher. So it's really quite impressive. Some projects in AI are scaling extremely fast right now, but it's only a handful of people or companies that control that and benefit from the value creation of it. So definitely, I think you definitely have to be careful when you invest in crypto or in tech, but they are industry that you should not disregard when you're trying to preserve or build wealth, basically. So yeah, that's my short intro about why this is important.
Yeah, I think it's really interesting topic about like how and where to invest, because probably people are having they're having some savings, but they have lack of knowledge where to invest the money and have the higher return rates. And most of the people, they just don't want to put like a risk on that because we have now the economy recession, which is not a great moment to invest. When people, I think they don't have enough knowledge of how and like where to invest.
Exactly. And I think even if you look at real estate, depending where you live or where you do it, I think the average return is about 7% per year. Last year, you actually didn't make money on real estate per se. It's quite challenging to find real kind of ways to preserve your wealth and not suffer to devaluation. In the US with 8%, it's one thing, but some other country have suffered inflation in the 30 or even 60% per year. So in this case, it's much even worse. So definitely worth a talk. Okay, so with that said, so I have different strategy of investing in crypto, but right now the one that performed the best with the least risk is that I use grid bots to trade. So I'm not active trading every day, but I have bots that do it on my behalf, but I just configure them properly. And my latest strategy that I activated about 4 months ago, I was able to do on average 10% per month with that.
How you can say that there is a less risk? Because this is, I think, something really important that people are looking for.
Yeah, so I look at the drawdown and also the consistency month over month. And the way I designed it, conceptually speaking, is that it's market neutral because I'm shorting and making longs in parallel to each other. So they kind of annihilate part of the market risk. But because of the grid bot, like it keep buying low and selling high, and it keep making this, but in reverse for a short. It means that my capital is not really changing that much in any of the direction, but the yield keep accumulating over time because it does eventually come back because there's fluctuation up and down. So that's why I say that it's less risk, but of course it's difficult to quantify, especially with only 4 months of data. But yeah, we'll see how it goes. Either way, I can explain over the course of several videos how it works because it's a little bit complicated to get started.
Yeah, I think that this is where the problem comes, that once like the theory, it's really hard to apply this theory to the actual part of the like trading and where to invest.
Exactly. I think I've started being much more active and full-time in crypto in 2017. And I think the first year I lost quite a lot. I lost most everything. And it took, yes, about 6 years to build the knowledge that I needed to get to a point where it's a lot safer. But even then, there's always risk. So anybody that is new should not go in full steam. They should only put money that they can afford to lose and just treat it as a learning kind of curve. It's the money you lose, you consider that it's your education cost in a sense.
Yeah, I think that's the whole trick about investing, that you have to invest the money that you would be okay to lose, because
Exactly.
this is the whole idea of investment. Because I heard like what happened with FTX, when people have been complaining that I lost all my savings, but when you think like why you should invest all the money that you have to this something, like everything can happen. And I think it's really makes sense to, let's say you have amount of money to invest and you would be okay to lose them, because it's just the things that you have to try out and see how they work.
Exactly. There's definitely risk in every industry. If you've invested in real estate in Detroit, I don't know, 20 years ago, you would not have made money. There was a pretty massive collapse there. And some part of the world, they give houses for $1 in some place in Italy, for example. Yeah, nothing is without risk. So people should be aware of that.
Yeah,
And
even when you have savings in a bank, you can lose those savings because once the bank go bankrupt, so it's just something that you cannot change or handle it. So you're just losing the money, which is really risky.
exactly. Right now,
Mhm.
there's a trend about various countries joining forces to try to replace US currency as a global reserve currency. Even if it doesn't happen, there's still pressure, and governments that, historically speaking, were buying a lot of government debt from the US, like Japan, they have to deal with their own economic problem right now. So they are no longer buying, and they are even selling the debt on the market. So that kind of implied that it's possible the next time the US have to print money to prevent the economic collapse, they may have to buy it themselves. And this
Mhm.
to more inflation. So it's very risky because every 250 years or so, there's massive change in power in the world. It's only before 1945, before the Second World War, that it was the UK that was the world power, and it was let's say, the British pound that was the global reserve currency back then. That's not that long ago when you think about it. So whether or not the US currency will keep to be, that's not necessarily that clear, and it could transition over a period of 20 years. But I think pension plans could be at risk for people who are based on a pension plan that is highly correlated to US currency. So that's the kind of thing that I would be really mindful to try to diversify in things that are less correlated to the US currency and the US economic conditions as much as possible.
Like you would say that pension plans would affect mostly like the US citizens, or
But pension plan, for example, in Canada is the same thing. It rely on being able to have a working workforce that contribute and export to other country. But in the very long run, in a span of 30, 40 years, We don't know what could happen. There could be a massive global shift to a new global currency, and we don't know what could happen to the losers in this process.
Yeah, I think that's a really tricky point, that the economy itself, you cannot predict that, because they try new things that they probably, some of the actions that they do in a worldwide economy, it's based on a historical theory, but they still adapt new things because they have to try it how it works. And this is the scariest part, that it doesn't mean that the way how they apply it and then the way how they see it is going to work, because
Exactly.
it's really unpredictable how people would behave, how the economy itself would behave. And I think this is a really risky moment, like what happened in Russia in 90s, when people, they had savings, everything, and when the collapse happened, and I remember like all the people have been struggling a lot, because the value of money that you had yesterday is tomorrow.
Exactly.
And I think this is the craziest moment.
That's right. So that's why I would diversify at least a portion.
Yeah, so I have few questions like about the Bitcoin itself, because it's been quite long in the market. And I have a question like regarding, so Bitcoin like kind of has been referred to as a digital gold. And can you explain why is it happening? And it's actually like quite interesting topic, because I think once it go that way, it means like people would trust more in that sense, I think.
Yeah. So there's a little bit of misconception when people refer to Bitcoin as gold. Previously, with the team, we did some analysis with data science to look at the cross correlation between Bitcoin and the rest of the market, including gold and the stock market and so on. Bitcoin was a lot more correlated to the Nasdaq and the S&P market, to the stock market, basically. Gold, typically speaking, was used as a refuge asset. So when the economic of the US or like other countries going badly, people seek out to buy gold as a refuge because the value preserve a little bit better. But it's still quite volatile. I've tried it and I was not super like happy with the result. So the thing, when people refer to Bitcoin as gold, it's not in the context of a refuge asset that much, because it's very volatile and it's a lot more correlated to the stock market, in my opinion. So if you're trying to escape the stock market because you expect the stock market to collapse, it's not necessarily that likely that Bitcoin will save you. It may collapse too. And recently, like when the bank started to collapse in the US and like elsewhere in
Yeah.
Europe, like a year ago, the stock market, if I recall, went down because a lot of tech companies were at risk, but Bitcoin went up because people were losing trust in the banking system. So the correlation between this is not always maintained perfectly. Sometimes it's no longer correlated, sometimes it's correlated. So it varies a bit. So the answer, it's more complicated than a simple answer. With that said, BlackRock and other like big investment banks, they created ETF of gold like several years ago. And this has increased the adoption of gold as a commodity and as a source of preserving wealth, I would say, by investors. And it was a pretty big kind of increase. And when you look at that, BlackRock filed for getting an ETF of Bitcoin also. And other organizations similar to that applied for Ethereum ETF as well. So crypto is becoming much more institutionalized, and it's expected to occur within the next year or so. So at which point we can, even though Bitcoin is not such a refuge asset compared to gold, I think it may start ending up in a similar process, that it's possible that it start being a bit uncorrelated to at least economic downturns. It's not possible at least, but it's still a high risk asset, just like it is for the stock market right now. I think it depends on the time frame that you're looking at. So what's also quite interesting between a gold ETF, or like the ETF, what made gold increase with the ETF adoption is that It's not the it's not a fixed supply for gold. People mine it from the ground, and there's more gold being produced and being put on the market. And Bitcoin is right now is almost the same. If you look at what's the Bitcoin in circulation versus the mining process of Bitcoin, it produces as almost the same in terms of percentage. So I think short term we can expect a ETF of Bitcoin to perform relatively the same as when gold was launched several years ago, or like maybe in the same ballpark. But what's interesting is that the actual entire supply of Bitcoin is fixed. So right now there's more Bitcoin being produced, but every 4 years, this reduced by half the production. So in the future, the production of gold will continue to probably increase at the same speed as it is now, but the production of new Bitcoin will reduce, at which point the value should increase faster than the value of gold as a commodity. So I think over time, it's very possible that Bitcoin could become a refuge asset. But right now, it's still a hybrid and not always considered a refuge. Like just a year ago, it lost, 50 or 60% of its value in just a few months. So yeah, you do have to be careful and not put all your eggs in Bitcoin or in crypto, that's for sure. It's still a high risk asset at the moment.
Yeah, but when you think about like the price, the volatility, and what do you think how it would affect when it would go to the S&P like 500, like how it would affect the Bitcoin, if it will be more stable, or how the volatility would look like?
So here's the challenge. If you look at the stock market, there was regulation put forward to reduce market manipulation. Otherwise, entity with large amount of capital could crash the price down, push the price up, and take advantage of smaller investors. So regulation was put forward to prevent that. When it comes to Bitcoin, it's a worldwide market adoption. So there's no current regulatory body that can prevent market manipulation. So I don't know if a Bitcoin ETF in the US will necessarily prevent market manipulation elsewhere in the world. So the only thing that can really prevent market manipulation will be with more market adoption and more, I would say, you want a circular economy. If all the shops you go to accept Bitcoin as a mode of payment, then nobody needs to sell it on the open market and reduce the price. So once you reach that point, and maybe part of the next step of evolution is that ETF on the market will maybe stabilize the price. Maybe it will get more manipulated. I don't know yet. But over time, as more commerce and businesses accept it as a mode of payment, and as long as it no longer gets traded with price impact, I think it's going to get a lot more stable over time.
So you would say that it still would go up in some time?
It will not only go up, but it will stabilize. The price will not be as volatile anymore if we reach a circular economy kind of mechanism. But I think it's another 10, 20 years. And right now, it cannot happen on the main blockchain of Bitcoin because it's too slow. So it has to be done on other like side chain and layer 2 and some other mechanism. But I think it will get there. It's a matter of time, I would say.
Yeah, but that's actually like an interesting question of, so the financial institutions, how it would like change or which opportunities it will give like to the traditional banks or financial institutions into integrating the Bitcoin itself and blockchain technology into like their operations.
Yes, that's thing. So if you look at pension plan, for example, they have limited ability to put money in high risk asset. And that's why if you have BlackRock or another such large banks having control over ETF, then institutions like pension plan can buy, and it's a lot easier for them. And there's ways for them to buy with their brokerage account without asking permission of their superior. Because when you want to buy, if you're a pension fund and you're like an asset manager and you want to buy high risk assets, sometimes you need to ask permission, and it's not as easy to buy. It's a lot more paperwork and all that stuff. So it makes it a lot harder. Having those ETF will make it a lot more easy for large institutions to put money. And then that's where I think it's interesting, because now if you're thinking that maybe US currency and the stock market may collapse, crypto may survive a bit better in some cases, depending on if it becomes much more into a circular economy model. So I think it's good to be diversified, and having pension plan being able to put money into this will get a lot more interesting, I would say. And it will protect all the pensioners as well. Because Bitcoin is not dependent on a single country. It's a worldwide kind of phenomenon. So if one country collapses, other will go up. So the demand for Bitcoin is worldwide. It's not concentrated on a specific country necessarily. So.
And when you think about like the challenges, it's why it can be like challenge for them, or it might create any issues maybe for the traditional banks or financial institutions.
Yeah, I think it's a lot to do with regulation, with market manipulation, and with all the scams. It's a new industry. Yeah. When Visa came on the market, credit card fraud was a really big problem, and they figured out how to deal with it over time. But early on, people were really concerned about that. So every new market, I think, goes into those phases, and they have to get clean and regulated over time to be more widely adopted to this.
And so the adoption of Bitcoin itself, will be, I think, a huge impact now into the traditional like banking system, because it will create a more trust. So I think the impact of that, I think, would be huge.
That's true, definitely. But the thing is, I'm always in the back of my head, there's booms and collapse cycle in every industry. If there's another way for the very rich to just pump and dump, they will continue doing it. So it's another industry to milk some of the community. So you just have to be careful and buy at the right time. When all the media say that it's the right time to buy Bitcoin, it's probably the right time to sell.
Exactly.
So
that's definitely true.
So you should not treat this as a short-term kind of a refuge asset, not at the current time point, I would say. It's probably going to keep to be volatile for quite another several years, I would say. And we have to be conscious.
It's really interesting how like Bitcoin have been like fluctuating lately, and it was unpredictable. And I was looking for the kind of, they called it the concept of the like Bitcoin bubble. So I really would love to go more like deep into the details of the concept of that.
Yeah, the thing. So in every market, you have smart money that tend to buy at the bottom. So whenever you see all the media saying, and they keep giving bad news about something, that's usually the right time to buy. For example, I don't know, maybe it was 15 years ago or 20 years ago, but Mexico was into like a massive economic collapse. And there was one individual that ended up buying a lot of telecoms and like all kinds of like big organization that provide like electricity, telecoms, and all kinds of stuff like that. And then when the economy recovered, he ended up being the most wealthy individual on the planet, even above Bill Gates. He was the richest for a few years or a few months at least. And that shows that smart money tend to buy when it's the worst time, and from a media perspective, at least. And then when the media start to scale and keep saying how good the market is, and that's when like people who are not really in the know-how get caught buying at the top. So the deep pocket keep doing those cycles. So Bitcoin it cannot be prevented from this to happen to Bitcoin as to every other industry. It happened in everything. So you have to be mindful to not follow what everybody is telling you. and that include even this video. Nobody has a crystal ball and can predict the future 100%. It's better to be safe and diversify and try to be contrarian to the rest of the market as much as possible in some case. It doesn't always work out that way there, so you have to be careful and do your own due diligence. But that's the thing. I think those bubble of Bitcoin will probably continue. I expect probably in 2024, 2025 to have another bull run on the crypto market that starts and peak 25, maybe 26 at the latest. And I think it's probably going to collapse again. I would expect that, to be honest. I don't know if it will collapse 60% or just 40 or 30% at that point. But I'm saying it's the balance between smart money and the crowd that come late to the party. So one thing, for example, in the stock market, if you look at what's going on, NVIDIA is growing like crazy. And if you look at the NASDAQ growth, it's being produced by a handful of tech company. The vast majority are not financially performing that well. So all of people who are getting tired that they have stocks that are not performing that well, they sell them, and then they go put in the top performing companies, which is NVIDIA and a few others. And then this creates a big bubble. So it's entirely possible that right now we're in a pretty bad stock bubble on the market. And because I think NVIDIA, that's such a massive growth with the AI hype, it ran out. I don't know when, or maybe it will not, but you have to also consider that when government print money, it's money that goes into the market. Even though you have, let's say, a stock on the market that is growing 30%, if it's coming because of a new supply of currency, it's possible that that company didn't actually grow because it's just the purchasing power has decreased maybe 30%. So you have to consider when you see the stock market growing that it may be that it could be constant when you consider it in terms of purchasing power. And again, I would refer to the inflation rate to be not necessarily the most accurate metric of purchasing power.
Yeah, that's probably because when the inflation, people are starting like saving money. I would say the volume goes a bit down in the sense of that they preserve more money than either investing somewhere because they're scared what's going to happen next. And
Exactly.
that's now the moment when it's happening nowadays. And what happened lately with the banks and how the whole stock market like collapsed at the beginning of like by the end of 2022, it was a crazy moment. And now I think people are scared as well what's going to happen next as well.
Exactly. And to me, that's what I fear is that assuming there would be another crypto crash, let's say 2026, the macroeconomics will matter a lot too. Because if governments in many different geography in the world print a lot of money, it's possible that we don't suffer a collapse because maybe that money could go to the crypto market and to other market. So you have to for this in is that even though the market might be primed for a collapse, it may not happen if the government is printing money a lot because it's more liquidity that flow into the market, into high risk asset at that point.
Yeah, that's the most, I think, interesting moment now to see where the economy will go in the world itself as well.
Exactly.
And so moving on a bit on the Ethereum part as well, I think this is would be interesting as well. And one of the questions that I had in my mind is, so we have the Bitcoin and Ethereum as the main part that usually people trade in the market. And I think it would be interesting to know what's the difference between them and why would one choose over another one, to go more deep into the differences between them.
Yeah. When you look at what makes price, and I would say price is not always a good representation of value, but there's laws of supply and demand. This is what dictate price shift for whatever assets. So in terms of Bitcoin, they went with a fixed supply, and with the mining process, it's not exactly fixed, but there's a very limited amount of production of new Bitcoin put on the market. So they decided to work on the supply curve of the equation in order to represent price growth and value creation. So this is really based on scarcity. That was the model that they adopted. Meanwhile, Ethereum, it's basically an operating system, a decentralized operating system to create new application on top of the network. So Bitcoin doesn't have that. It's really the scarcity. It's more like meant to be some sort of edge against economic collapse and all that stuff. But Ethereum is truly programmable money, and you can build new application on top of that financial layer, basically. And in their case, they opted to have the price action based on that market adoption. So what they're playing on is less on the supply curve, more on the demand curve. So by having like thousands and thousands of developers building new application on top of Ethereum, that actually create demand. And this is why I much prefer Ethereum, to be honest. And there's other chains with smart contract capability. And Bitcoin is working also on similar things, but it's not on the market yet. Or it is, but it's embryonic at best. So most of the market, when you're trying to build new technology on an existing blockchain, it's mostly Ethereum that has 90% or more of the market. And I see this as a very strong network effect. And to me, I much more favor this. And so there's misconception on the market where fixed supply is really favored. To me, it's not. What you need to have is a supply that is a little bit less than the market adoption. So you can print new money, but you just need to make sure you print less money than the adoption itself. This way, there's still a little bit of price growth. Meanwhile, if adoption decrease, you need to burn. You destroy the tokens and all that stuff. So you take out of some of the supply. So this is not something that you can really do with gold or with commodity. You cannot really take out some of it out of the market that much. It's not how it works. Meanwhile, with Ethereum, you can basically, and right now that's the thing, it's deflationary. The supply of Ethereum, it was inflationary for a long time. And then a few months ago, they upgraded, and now it actually became deflationary because now there's actually, they buy back and they burn some of the tokens. So it actually, the supply is decreasing. So now you have increased adoption plus like a decrease of supply. So this will have a massive potential boost on the price over time. And if you combine that, I think Ethereum, I favor it quite a lot, but you always should diversify no matter what, because there's technological risk and all kinds of other risks that we don't foresee.
Yeah, but there is a role of Ether within the Ethereum network. So what's the importance in powering transactions, smart contracts? What's the actual importance of that?
But I think it's for Ethereum, it's really that you can build new application and new services on top of it, new products, and that become programmable money. That's what's interesting. You can design entirely new economic model on top of it, and it's a lot cheaper than building it on yourself in terms of market adoption and technological like development. So it's a decentralized operating system. That's the interesting part. And meanwhile, why the Ethereum is needed is because you have to pay the transaction fee of building, and your community of users will have to also own Ethereum in order to pay the transaction fee while they use your application. So this creates demand over time. So right now, there's not a ton of good use case of application built on Ethereum that people use every day. But for me, there's things that I do. Like I used to run a business and we didn't even have a bank account. Everything done on the blockchain, and it was on the Ethereum network. So all the employees were paid in Ethereum, and the entire business was running on Ethereum. It happens, and I think it will become a lot more prevalent as those type of ETF of Ethereum and Bitcoin occurs. It will become a lot more used as some sort of edge against potential devaluation of global currency. So it's always a risk.
Yeah, that's the whole kind of that in the future it might change everything because they upgrade and then they change a bit on a way that for the users it will be easier to understand, or they lower the fees. So I think this is something that would be interesting to look at in the future, and how it would affect. But when you think about so I heard about like liquidity pools in DeFi, and what do you think the concept and like how they function on Ethereum based decentralized exchanges?
Yeah, there's a little bit of innovation there, but overall is that when you want to buy a crypto asset or anything, you need someone
Mhm.
to sell. So a liquidity pool is essentially a bank of a pool of cash where the transaction, you don't need a buyer or seller to match you. It goes straight into that little bank. It acts as a buffer. If you do it on a centralized exchange, there's entity that specialize to do market making. So they are the matching transaction that match your buy or sell orders. But on a decentralized exchange, in terms of DeFi, it's automated. So there's no market makers that really take decision. It's used on a mathematical formula like a bonding curve, typically speaking. So the price move along that curve depending on the market adoption and the selling volume and all that stuff. One of the complaints I have to that is that if your liquidity pool is very small compared to the volume, you could have massive price swing. So there's a new trend in the market right now that is decentralized market, like crypto exchange, that use
Mhm.
order books as opposed to a bonding curve. And there's advantage to that because I think the price is not as doesn't have as much slippage and fluctuation. And but I think there's still quite a bit of interesting innovation in that space. And there's bonding curve that follow different models. I've seen a liquidity pairs. Usually it's always two tokens, but I've seen some that it's one main token with an entire pool of different tokens. So that you can create a decentralized kind of basket of commodity or investment fund and things like that. Yeah, there's interesting aspect to that.
Yeah, I think when we would go like more into the details like of borrowing lender like from both sides, and I think it would be interesting to see how it works more into the details. And yeah, for the moment, I think that's all I would say beginner questions that I had. And it was quite interesting to speak and see how economy and all the blockchain is colorated and what's the future potential for them and how it would grow in the future. And
Indeed.
I think that's quite really big topic to discuss and go into the details.
Yeah, and thing as in the future video, I'll go over how what are my current strategy. There's more than one, but one perform better than the others. But with that said, there's a lot of knowledge that is prerequisite to that. So it will take a bit of time to get there. But the thing overall is that a lot of crypto assets are badly designed in terms of tokenomics. So I'll have to
Mhm.
explain how the tokenomics works to assess losers and winners. And it's not because it's a winner that it will automatically succeed. There's other factors that will contribute to a success of a project or versus not. But the thing that strategy implies that I have two baskets, the losers and the winners, and I need both of them for my strategy to be of operating in a market neutral mechanism. And that's important because that means that if there's a crypto collapse that come back or a boom, like if it's
Mhm.
you're not so much at risk unless you're shorting, but if there's a collapse, I don't want to repeat history and lose money because I've lost quite a bit of money in the last two collapse. At this point, that's why I built a mechanism that is a bit more market neutral. This way, I'm protected in either direction and I can still generate income.
Yeah, and I
Uh,
think that's quite important topic because many people they do invest into the tokens, but there have been like a few examples that happened lately that it was like a huge collapse and people lost their money. But it's just because of lack of the knowledge. And I think that would be a great experience to go through tokenomics and see how you can analyze and see if it's this project will be profitable or if it would make sense to invest or not.
yeah, I think that there will be no guarantee no matter what, because there's other factor beside the tokenomics. But the tokenomic is one aspect that I look into a lot when I evaluate where the project belong. And I would say probably 99% of crypto project on the market, I would put them in the loser category, which means that they may go up a lot, But in the long run, I'm confident to say that they're most likely going to collapse and keep losing as a trend, long-term trend. And
so you would say that tokens is more into the short-term investment.
But I think for me, I prefer to invest a bit more long-term. So that's what, because it's much harder to predict short-term gains and losses, and you're much more. But yeah, so I think there's only a handful of projects that I would believe is that over a long life cycle will perform better. And if you look at it historically speaking, Ethereum and Bitcoin, every bull run, their all-time high keep increasing, while the vast majority of other tokens keep decreasing in terms of all-time high at every bull run. So those projects will eventually just cease to be talked about and drive adoption. So that's why if you have both of them in your basket and you can make money in a way that both are in parallel, you can annihilate the fluctuation up and down. But meanwhile, the market keep going up and down. So eventually you produce yield, and I'll explain how that works with the grid bots and all that stuff. Get there is that some people may not have the capital to risk at all. So I would maybe even start with just things where you can trade your time to earn tokens and capital. For example, airdrop farming. This way you don't have to risk money. You just have to put your time, and it's a good learning curve because you're not really that much at risk. There's still risk of being hacked and losing your airdrop that you collected already, but we can go over that stuff also. There's project right now that would just give you their token just to be active in promoting them and doing activity to test their technology and things like that.
And you already can exchange those tokens to something to use it in the market. Yeah.
It's a good way to get started if you don't have the capital to risk. You have the time. So we can go over that stuff. And the thing, another way to build wealth is that if you don't have the capital, you can also start businesses. And the thing, it depends what you do, but we can discuss that as well, how to launch Web3 businesses, because there's lots of business opportunity also.
Exactly.
Depending on the business, you may not really need that much capital either. You can start with consulting services and transition to a product to automate over time. Great. So it was a pleasure to have a first meeting, and we'll come back next week with another recording.
Yeah. Thanks a lot for your time and going really deep into the details and giving the whole picture and overall how I would say to have a sense in easy words and to imagine how it's all correlated and the meaning of everything. Yeah, thanks a lot for your time and for your effort. And speak to you soon for the next.
So a special thanks also to one of our partners, Cyrator.com. It's a token review platform. So it's a good way to try to look at what other expert analysts on the market thinks about various crypto projects.